and welcome to the Economic Avengers. This is the podcast where we take complicated financial topics and turn them into the real and relatable conversation. I am Mare and today we have a special episode lined up. We are diving deep into Sri Lankan's financial system like never before. We all explore the major three parts of it. Don't worry, we are not just talking the economic investors here. We are breaking it all down for you, students, professionals, even those just curious about how to economics works. So, what are these markets? Why do they matter? How are they connected to our daily lives and the overall economy? And what kind of challenges are they dealing with today? So whether you are sipping your coffee, watching traffic, or just kicking back after a long day, this episode is made for you. Let's get on the markets, one idea at a time. Let's get this started.
Hi everyone, and welcome to the Economic Avengers. I'm Ramin Fernando, and we are talking about how money moves through Sri Lankan economy. We have three special guests with us, Mr. Seni, who will talking about how money market manage short-term funds, Mr. Hiruna, who will explain the role of the capital market in long-term investments, Mr. Buddhiga from the central bank, who will help us understand interest rate and inflation and keeping the economic stable. Together, we will explore how these part of the financial work together and affect our daily lives. Let's start. Mr. Seni, can you explain what is the money market and what do the people trade in it?
First of all, Ravindu, thank you for having us. The money market is basically where short-term lending and borrowings happen, usually for less than 1 year. It's mainly used by banks, financial institutions, even the government to manage their day-to-day cash. So we trade like treasury bills and commercial papers, certificates of deposits, and something called repurchase agreements. These are the very safe, low risk, and can be quickly converted to the cash, which makes high liquidity. So that's how it works.
Got it. Like a short-term loan club for the financial world. Now, Mr. Hiruna, what is the capital market and how it is different from the money market?
Yes, right. So, when a business or government need money for long term, like a few years or even decades, they use capital market. This includes places like stock market and bond market. Instruments traded here include government bonds, corporate bonds, debentures, and shares. Unlike the money market, which is short term and low risk, the capital market involves more risk, but there's also a chance of high returns.
Got it. So the money market is short-term and safe, and the capital market is for the long-term. Thank you both. We will see how is the effect us soon. Right. Now that we got clear idea of these markets are all about, let's go a little deeper. Mr. Seni, start with again. How does the money market connect to the overall economy? I mean, for the people listening at home, why should they care about what's happening in the money market?
That's a great question, Ravindu. The money market helps maintain the day-to-day liquidity in the financial system. So when banks need cash, they can borrow it quickly and cheaply. And that keeps things moving. If the money market frees up or rates go too high, borrowings become expensive, and that can affect loans, credit cards, even the job creation. So it may seem distant, but it trickles down to everyday life pretty quickly.
Interesting. So it's like engine work behind the scene to keep bank and business moving. Mr. Hiruna, how about the capital market? How does it help economic growth?
Indeed, the capital market is equally significant, but more long term. It provides companies with access to capital they require for growth, innovation, or employee expansion, purchasing bonds or shares, an essential and investment in future growth.
Got it. So when the capital market does well, it means business growing and creating opportunities. And finally, Mr. Buddhiga, how do these markets show?
Okay, Ravi. Actually, key markers of the state of the economy are both markets.
The central bank uses investor activity in the capital market and money market interest rates to gauge public confidence. We might intervene with policy tools such as changing interest rates or offering liquidity if the money market is tight or the capital markets are collapsing. Our objective is to preserve stability and sustainability growth in the economy.
Alright, we have covered the basics and how they connect to the economy. Now let's talk about the real challenges. Mr. Sen, what are the main challenges money market face in Sri Lanka and around the world?
Good question, Raghu. Liquidity management is one of the most significant local challenges, particularly in time of the economic recession or unforeseen shocks like inflation or foreign reserves problems. Interest rates have fluctuated quickly in Sri Lanka at times, making it challenging for banks to make long-term plans.
Right, so whether it is year or birth, sustainability and trust really seems to be the foundation of the healthy market. And Mr. Budiga, let's hear your thoughts. What are the biggest challenges the central bank facing managing or regulation these markets, both locally and internationally?
Actually, Ravidu, finding the ideal balance between promoting economic growth, containing inflation, and preserving a stable exchange rate is the central bank's biggest local challenge. Dealing with physical deficits, international pressures, and occasionally limited resources makes things difficult. Responding to external shocks such as pandemics, global financial crisis, or changes in the commodity prices is a major challenge on global scale. Even if the underlying cause is distance, all of these can have an impact on Sri Lanka. Additionally, it's becoming more and more crucial to stay up to date with cybersecurity, cryptocurrency markets, and digital finance.
Thanks for that overview.
Around the world, several major crises are shaking global financial markets, creating uncertainty for investors and every people alike. First, the Russia-Ukraine war. This conflict has distributed global energy and food supplies. Europe, once heavily dependent on Russian gas, had to find new sources. That pushed energy prices up worldwide. The war also affected wheat exports, leading to food inflation in many countries, especially in developing nations. Secondly, the Israel-Gaza conflict has added tension to the Middle East. Investors worry that if the conflict spread to large oil producing countries, oil prices could rise, and that fear alone often causes market swings. And then there's policy uncertainty coming from the United States, with former President Donald Trump introducing of promising stricter trade rules and tariffs. Global trade partners are worried. Strict US policies could slow down in international trade, hurting companies that rely on exports, and that's a red flag for financial markets. All of these global issues create one thing investors don't like: instability. That's why stock market go up and down rapidly. Currency shift and commodities like gold and oil become more volatile. In short, global crises, whether political, military, or economic, are closely watched by financial markets. They create risks, and risks affect prices everywhere, from Wall Street to local economics.
Mr. Sini, how have global shocks from the Russian-Ukraine war impacted the Sri Lankan money market, particularly interest rate, inflation, and currency pressures?
Actually, Raghu, that's a crucial point. The war caused global oil and the gas prices to rise sharply, and since Sri Lanka heavily depends on imports for energy and food, therefore we were hit hard. Inflation skyrocketed, and the control that the central bank had to raise policy interest rates aggressively. Therefore, this affects short-term borrowing cost in the money market, plus the rupees lost value rapidly, adding the pressure to our foreign reserves, as well as the interbank liquidity became very tight, and overall the money market was under the serious strain. So I think that's your answer.
Mr. Hiran, why investors' confidence collapsed during the 2022 crisis, and how did the capital market react to the debit default, power cuts, and the rupee depreciation?
Absolutely right. Investor sentiment collapsed mainly due to uncertainty. When Sri Lanka announced the foreign debt default, global investors panicked. They feared they wouldn't be repaid. Locally, people were facing fuel queues, blackouts, and political instability. These are all red flags for the investors in Sri Lanka. As a result, we saw massive capital flight. The Colombo Stock Exchange has to pause trading at time due to extreme volatility. Both foreign and local investors pulled out funds, causing a major dip in share prices and market.
Given the recent economic challenges, how have global events like Russia-Ukraine war and US policies influenced Sri Lankan financial markets? And what should investors here be most careful about? I would like to start from Mr. Seni.
Actually, global events have a big impact. The Russia-Ukraine war pushed up energy and food prices worldwide, which fueled inflation here and put pressure on our currency and the interest rates. US trade policy uncertainties can affect export demand, which in turn impacts foreign exchange and inflows. Investors need to be careful about external shocks that can quickly ripple into our markets, especially with our still unstable economic position.
I agree. International tensions and policy shifts cause volatility globally. And Sri Lanka is no exception. Capital markets here react strongly to such uncertainties because they affect investors' confidence and foreign investment flows. The key for investors is to watch global developments closely while keeping an eye on domestic political stability, which also influence market sentiment.
Good evening, everyone. I'm speaking today on behalf of the International Monetary Fund regarding our continued partnership with the government of Sri Lanka during one of the most critical economic periods in the country's recent history. Following the debt default in April 2022, Sri Lanka faced severe economic crisis. In response, the IMF approved 3 billion extended fund facility arrangements to support economic stabilization and lay on the foundation of sustainable growth. Let me be clear. Financial assistance alone is not enough. Our program is built on 3 pillars. First, fiscal consolidation. This means improving government revenue through tax reforms and better public financial management, ensuring that spending is efficient and targeted and sustainable. Second, we support deep structural reforms, including anti-corruption legislations, transparency in public enterprises, and more investment-friendly climate. These reforms are not only about numbers, they are about building trust with the Sri Lankan people. Thirdly, we have focused on debt sustainability. The government must continue working with us, its creditors, bilaters, and multilateral and private to reach fair and timely debt restructuring arrangements. We recognize the hardship these measures may cause in the short term, but these are essential to restore macroeconomic stability, reduce inflation, and protect the most vulnerable segments of the population through target social safety nets. Our commitment to Sri Lanka is strong, but continued progress depends on credible implementation by the authorities and sustained public support. We remain engaged not just as a lender but as a partner in recovery. Thank you.
Mr. Buddhigan, how are IMF-led fiscal reform like tax charges and spending cuts affecting everyday Sri Lanka? And what challenges does the central bank facing in supporting them?
Indeed, Ravidu. Long-term stability depends on fiscal consolidation. But we also know that the public has not found it easy. It makes sense that tighter public spending and higher taxes would be challenging, especially during the recovery. The central bank supports this by maintaining the stability of the financial system and controlling inflation. Our task is to balance monetary policy, tightening, and just enough to keep inflation under control without shifting growth. Although it's a fine balance, it's essential to build a more solid foundation for the future.
My second question is, how does central bank support anti-corruption and boost investors' confidence as a part of Sri Lankan structural reforms?
What a wonderful question. One of our main priorities is transparency. We are working to further strengthen our oversight role, particularly in the banking and finance sectors, and have already modernized some of our regulation and enhanced data reporting. We are contributing to the restoration of trust by enhancing governance and demonstrating policy coherence. We are doing our part to provide the stability and clarity that foreign investors require.
My last question is, can you update us on how the central bank is working with the governments and partners to manage Sri Lankan debt sustainability?
Indian revenue. A crucial technical role in debt restructuring is played by central bank. We offer analysis, projection and sustainability input while the Ministry of Finance leads the negotiations. We are actively working to finalize agreements with other bilateral creditors, including private bondholders, and have already made progress with a few of them. The objective is to protect the most vulnerable while preserving access to financing and making sure that future debt levels are manageable. Although the process is lengthy, it is headed in the right direction.
Mr. Singh and Mr. Hirman, what are the strategies are you using or planning to help grow and strengthen our financial market? Let's start with Mr. Singh.
Thanks. From our side, Ravidu, we are all about keeping the money market stable and running smoothly. We are working with the central bank to improve liquidity tools and bringing in digital solutions to make transactions faster and clear. We are also trying to get more local investors involved with the better short-term options, so we are not too dependent on foreign money. And in the long run, it's about building trust, managing the risk, and making sure that market can handle shocks without the panic.
Great. A strong and a stable short-term market really lays the foundation for everyone else. Now, Mr. Hirman, let's talk about the capital market. What are the strategies are you looking at to support the long-term financial growth in Sri Lanka?
Absolutely, Ravidu. In the capital market, we are working to grow the market by adding new investment options like green bonds and REITs. We are focused on educating investors, especially young and new ones, to build confidence. We are also making it easier to invest online, even for people in rural areas like Honorable. Plus, we are pushing companies to be transparent so investors feel secure. Overall, we want the capital market to drive long-term economic growth.
Fantastic. It's really inspiring to hear that both short-term and long-term strategies are being developed to push the country forward. Thank you both. Before we wrap up, I have got last question for you both, especially for young listeners interested in finance or wanting to understand how it impacts their future. What advice would you give to young people in Sri Lanka who want to build career in finance to get better with money? Let's start with Mr. Sen.
My biggest piece of advice is build a habit of learning. The money market may seem technical at first, but it's really about understanding how money flows and read financial news, learn how interest rates work, and try to follow how banks manage liquidity. And as well as also never underestimate the importance of the discipline and the ethical thinking. They are essential in financial services.
Thank you, Mr. Sen. It's very practically and grounded advice. Mr. Hiru, how about you?
So Ravidu, I would tell young people, start small but start early, at around 20s. Even if you don't have money to invest, yeah, you can still learn how the stock market works, attend webinars or use simulations. Like I was started the stock market thing around 17 years old. Also, don't chase trends. Instead, learn how to analyze a company, read an annual report, and understand long-term risk and return. And above all, have patience. Capital market reward those who take time and think and plan.
That's really odd. Think long term is sometimes we don't have always focus on. And finally, Mr. Buddhiga, what message do you have for the next generation, especially from the central bank's point of view?
My message is simple, Ravidu. Value stability. Whether you are aiming to be an economist, banker, or entrepreneur, understanding things like inflation and monetary policy helps you make smarter choices. I also encourage young people to get interested in public policy, informed citizens, build a strong economy. And Sri Lanka needs more ethical, forward-thinking leaders in finance. If you want to make a difference, now the time to get involved.
That was really insightful. Thank you all so much. To everyone listening, whether you are thinking about future career or just how to handle your money better, I hope today's chats give you something useful to take away. A big thanks again, Mr. Sedik, Mr. Hiruna, and Mr. Buddhiga for joining us. Until next time, stay informed, stay engaged, and remember, finance literacy is power.
Alright, let's bring everything to focus before we are sign off. The money market is the part of the financial system. Short-term borrowing and lending of the money take places usually for periods of 1 year or less. Then we have got the key features. First one is short-term, low risk, high liquidity interest. Money market instrument, treasury bills, certificates of deposit, commercial papers, repurchases agreements or money. So then we look up who use the money markets: government, bank, corporates, and investors. Capital market. The capital market is where long-term funds are raised and invested. It helps business and government get money for long-term projects and allows investors to earn return over time. Then we go to key features. This is the long-term. Include stocks and bonds. Risk return is very high. Support economic growth. Capital market instrument. Shares, bonds, and debentures. Who use the capital markets? Companies, governments, investors, and bank and financial institutions. Looking to the economic crisis. An economic crisis is a serious financial breakdown in a country like high inflation, currency fall, defaults, and shortage. Sri Lanka faced such as a crisis in 2022 due to high debt, low foreign reserves, and poor economic management. Impact on financial markets. Money market focus, liquidity shortage, and unstable interest rate. Capital market. The stock market crashed, foreign investors withdrew. Rolling recovery. Central bank raised interest rate to control inflation, allowed the rupee to float, manage liquidity and secure an IMF loans. Money market provided short-term funds to keep bank and business running. Capital market helped raise long-term funds to rebuild the economy. Thank you for joining us today. If you found value in this episode, be sure to follow the show.
මලේ මටත් හිතයි කරන්න ආදරේ
Find the door.
What do people bring?
Thank you for having me.